on Beijing. We want to talk more about all of this with Stephen Roach. He is former chief economist at Morgan Stanley, now a senior fellow at Yale's Jackson Institute of Global Affairs. And I thank you for joining us. It is a busy day, a lot to get to, but I do want to start with China. CNN's latest reporting is the easing of tariffs on at least consumer goods, but back to those trade war tactics on strategic industries like tech and others. You know, your view is that this approach is neither for China nor for the United States getting anybody anywhere. You call it dangerously misguided. Elaborate for us, especially given the changes that we've seen in the global economy in the last few months.
Well, the United States and China have, in the last 5 years, Paula, gone from a trade war to a tech war to now the early skirmishes of a Cold War. And I think this reflects, and I've just written a book about it that'll be published shortly, a confluence of false narratives that each nation has with respect to the other. We blame China for our big trade deficit when actually we should accept responsibility for the fact that we have trade deficits now with 106 countries around the world because we don't save. And China blames us for trying to contain its quote unquote peaceful rise and has failed to address its own economic structural rebalancing challenges. And so this blame game has escalated. And, it's great that Janet Yellen and her counterpart Liu He spoke this morning with respect to tariff reductions. But they got to do a lot more than talk about a partial rollback of these tariffs.
What's at stake if these economies can't get it together in the way that you think they should?
Well, we've already seen this escalation and to go into a Cold War type conflict with a lot of geostrategic risks right now, not just in Asia, South China Sea, Taiwan Straits, but also because of China's quote unquote unlimited new partnership with the Russian Federation. There's always a risk that a Cold War could get hot. And so, we need to have a much more constructive relationship and framework of engagement between these two countries before it's too late.
Yeah, and we will see if China and the United States can come to that. I want to move on to what's going on in the economy more broadly. If you can help us make sense of what's going on today. We saw oil, of course, at that $100 level, but also you see the euro hitting historic lows, perhaps will hit parity with the US dollar. I mean, what is to come here for these economies, especially as everyone is expecting a global economic slowdown at this point? What do you think, especially when you still have inflation stalking these economies?
Well, the inflation issue is key, and the main policy action that we can take to address inflation is the one that the markets have correctly focused on in the last several months, and that's the Federal Reserve. The Fed was in denial over the seriousness of the inflation risk, incorrectly characterized the problem as transitory, finally recognized that that was a huge mistake, but recognized it too late. And so when the Fed is late and inflation is surging, it means it has more to do in terms of monetary tightening. And a Federal Reserve that has more to do raises the risk of a recession significantly. Had the Fed acted more expeditiously a year ago, as many of us had counseled, it wouldn't have this problem to deal with.
Now, I literally only have 30 seconds left. You described what the Fed didn't do. What do you think they should do when it comes to interest rate hikes going forward?
They need to be steadfast and determined and continue to raise their policy rate by at least 0.5 percentage point in each of the remaining 4 policy meetings of the year, and hold out the possibility that they will do more in 2023 if inflation does not subside as they and the markets currently anticipate.
Jay Powell says he will do what it takes, so we will see. I have to thank you, though, for weighing in on what has been an especially volatile day on the markets today. Thanks so much. Really appreciate it.